Today, we've launched, Monday, we had a big launch, small exchange. We launched crude oil, which is an exciting launch, an important asset class, largest traded commodity in the world. And John, if we can jump to the first slide.
I'm interested, man. This is good, man. I got questions, man. This is going to be great.
Good deal. So, you know what? And this is what's great. And it's so funny. Everybody, when we talk about crude, and it's interesting, like talking about corn, you know, you and I have talked about grains a little bit, and what's tradable is corn. But really, none of us, the corn they trade is not the corn we eat on the cob. It's number two corn. It's ugly. You wouldn't want to eat it. But where it's so important is as a food stock for animals. Corn syrup, corn starch, which goes into so many foods. It's the byproduct, not the underlying. Now, crude's a little bit of the same thing. Nobody puts crude in their car. Nobody heats their home with crude. Nobody does pretty much anything with crude. It's right. All the refined products. But for us, that key input that goes into producing all these byproducts is really what I think we all have a resonance. It's what we hear about every day. And I think, you know, small exchange, we build products that resonate in your daily life. And while we don't use crude, nobody, you know, I didn't just tank my lawnmower up with a barrel and a half of crude. We all hear about that every day. We hear in context, and we put that makes it us vested oftentimes with an opinion. But, you know, this was a great slide to talk about, you know, where energy consumption comes from. And while we have moved, natural gas, which 10 years ago was less than 10% of the amount of energy, especially on the electricity side, natural gas has moved to, with incredibly, in terms of electricity production, has moved from 10% to 34%. It's taken a huge spot in there. But crude and all the different pieces of energy, by far, crude and petroleum products are the largest source of energy consumed in the United States, whether that being powered turbines for electricity generation or for transportation or any of the other, you know, so many byproducts. And you think about crude oil, and that's where gasoline comes from. And heating oil. Absolutely. It actually is when you look at the way they refine crude oil, it goes into what they call a hydraulic cracking tower. Yep. And you get all these byproducts, everything from tar and asphalt all the way up to gases like methane, butane, that all depending on how long the process takes, and at what point they pull it off the tower, you get all these byproducts. And you think about that, everything from aviation fuel to all those other products all come out of this one underlying. So it's an incredibly important part of our daily lives. And, you know, we love to trade products that resonate in that fashion, that we know, you know, we're not trying to trade a naphtha future or some of these more obscure pieces. We want to trade the key driver of energy within the world that we live in. And that's where crude comes in. It's the largest dollar traded commodity in the world. So again, that piece of the puzzle. And there's lots of ways to trade crude. And I'm sure you've traded them, whether it be an energy stock like ExxonMobil. And it's like, well, they extract and refine a lot of crude oil. Absolutely. Along with 100, 200 other things. So does it wear the skin of a crude? Does it have positive correlation to crude? Yes, it does. Is it a strong positive correlation? No. That creates its own interesting trade, but it's not exposure to crude. What about things like XOP? Next level down. Absolutely. It's got a stronger correlation to crude, but not a perfect one. So it's not, well, I'm getting crude in XOP. I'm also getting some equities, some other pieces. And you and I have talked about this. Some days ETFs work like the underlying or the commodity that they're kind of focused on. Other days they work like the general equity market. Tough picking which day is right. Even products like USO, which you would think, now GLD is a great ETF substitute because it's actually
GLD
backed.
And SLV, those are great.
Right, they're backed by physical gold or silver. So there's a little bit of difference in pricing because of insurance storage. It's not material. It doesn't affect our returns. USO is kind of and I know it's, you know, it's a hugely traded product, but I kind of look at it as a broken ETF, partially because it's not constructed by holding crude. It's constructed by holding crude oil futures. And with that comes all the kind of vagaries of term structure,
Yep.
front month versus back month, and what's the difference. And that really can erode returns. And what I mean by that is that you can have a bullish opinion on crude. You can buy USO, and you can find that while crude in general rallies, that USO market is determined by not just the price of crude, but by a lot of other variables. So it's not a great substitute for pure crude exposure. What we want is something that gives us just crude. I don't want the equities. I don't want term structure, which drives and kind of disconnects USO a lot of times. I want the simplest, easiest way to express an opinion on this. I don't want to call it complicated world of energy, but there's lots of different ways, as we can see here, from trading energy and the way energy is produced and used. So I want the simplest, easiest way to do that. And that's why we trade crude oil. It's in our lives every day. It's part of everything else we trade. Think about that, Jermal, that, we look at any equity and there is an energy play within it. Now, it's funny, things like corn, you would think, well, what does corn have to do with crude or energy? Well, all the tractors and planters and everything that go into the planting cycle are powered by crude and its refined products. When corn is harvested, it needs to be dried, so when it's stored, it doesn't rot. What do they use to dry it? It could be a diesel drying system, or it could be actually a natural gas drying system. But energy plays a role in so many products. We think that, well, really, it doesn't touch into that. But we know even into mining, you look at the metals, you look at copper, that cost of extraction is directly tied to the price of crude. So this is, and I love how you used your dollar product as a hedge for an equities portfolio. You can look at crude trading as a great speculative position, but it actually is intertwined into everything we trade. So I'm going to take a moment here and not continue my dissection of.
That was excellent, dude.
But let's talk a little bit about what you're thinking when you think trading crude.
Yeah, it's like you said, in the past, most of my interaction with crude has been via stocks, right? It's like, keeping an eye on the big multi-conglomerates, whatever, Exxon or Conoco or I forget the other one. There's another one in there. Doesn't even matter. Then you have all the refiners, all of those guys. Like you said, oil is a lot of the way that we use oil primarily is gasoline, which is done from that cracking system with petroleum products, with breaking it down from those hydrocarbons. If I can harken
oh, I forgot the science.
We actually had a class on oil product, or not a class, but part of my organic. We talked about oil products. That was years ago. I don't remember all of it, but some of it stuck because it's so practical. Like you said, there's interesting parts. You hit me to that part about, just to reflect a second on natural gas that I didn't even know about with corn, the idea of how they use either natural gas or some type of maybe diesel to dry that. So that's always an interesting thing. But I think this chart is fantastic because just showing the primary usages of power and, the only other thing that it would be interesting that, of course, we don't have time for, just to see how this has changed over the years, which you kind of touched upon. What did this look like 20 years ago? What did it look like in 1980? That would be, I'm sure the petroleum part was a hell of a lot bigger, probably.
You're absolutely right.
The renewable energy part didn't even really exist. We know that wasn't the coal part, of course, if we go back 60, 70 years ago, the coal part was probably a large part of this pie. So it's really interesting that we have this chart and it shows us this breakdown. But talking about the product that we got, we're gonna be coming up. I think it's really interesting because it is a pure play from what I understand. So that's the interesting part to me.
Absolutely. And John, let's jump one slide ahead if we can. Thank you. So the price of crude affects many everyday events. So it really is so many of the things we hear news-wise, events-wise, even it runs through the performance of all these other products. When you think about crude, what drives it, and then how does it pull other things along? What we're going to get into a very tradable product we'll talk about in just a little bit. But how do you think adding this in, Jermal, when it pulls things and when it's driven by things, how do at least at the start, how do you start to break that down? And you've got a scientist's mind, a trader's mind. It's a great combination. How do you start to break that down?
Well, I think the first thing bears mentioning is crude oil is definitely, a geopolitical thing, right? Like
Yes.
there's a lot of different things that can move it based on, I mean, there's the OPEC deal, right? I don't mean deal, but like the OPEC situation, that's always what's regulating the how much oil is in and out of the economy. So it's an interesting trade. I mean, even just before we got on the show today, I think oil dropped like 3%.
Right.
Some news that I didn't even bother to analyze what it is because I don't even know it's going to mean anything in 5 hours. I mean, but that's that can happen at times with crude. So there's a little bit of volatility to it. It's not as volatile as like Bitcoin or anything, but there's a little bit of volatility to crude from time to time, and that's what makes it great and tradable. I mean, people have to remember volatility is what we like. We like that movement that gives you points to be able to get in and out. So I think that's what I think about with crude. Like the ability to trade a crude future is interesting because you have so many different things that move it, but it has intrinsic value and it has value in our economy, as you just talked about. So I think there's always at least a near term floor type of ceiling, and we just look to see where it breaks through that, however you want to do that, whether it's moving averages or whatever. So that's what I think about.
I think that was a great summary because and you really laid out where we're kind of going as, the next level of we're product indifferent, the next level of diversification. Now we talked about, first step of diversification is just not owning all tech stocks or owning more than one stock. Here we're going down really several iterations, which are incredibly true. Diversification is really empowering because it smooths your returns and it gets you to that consistency that you want. And you really walked through this idea wonderfully about how important it is to look at standalone products as tradable opportunity. And you can see the back and forth here. Have we rallied tremendously from last year's pandemic levels? Absolutely. A market that goes from 10 to 65. Now, the 10 was a tremendous extreme last year when actually that front month CL contract was trading at negative 41, I think. So
how about it?
Yeah, I think we'll look back and say, that had a lot to do with a CME's physically settled product and a lot of perfect storm of events.
Yeah.
I don't think we'll ever see that again, but who knows? Me maybe saying that guarantees it happening again, but a lot of back and forth. Volatility, as you talked about, but I like the idea that you get movement, you get volatility. It has positive correlation to a lot of things, negative correlation, so it acts as a hedge, and it gives us movement, which is all great. So let's talk about what we've been constrained to be able to trade crude before was 1,000-barrel contract. Now, on average,
sounds expensive.
You know what? It is at $8,000 for margin, and at about $1,500, we had an inside day yesterday of about $1.50 at 1,000 barrels. That's $1,500 per contract. It's a lot of movement relative to everything else I'm trading. It's a bigger bite. So I would much rather, and John, if we can jump one slide ahead, I'd much rather step into the size I want rather than be compelled to force my strategies to fit an uncomfortable size. And you know what? Let's talk a little bit about this. So size-wise, correlation-wise, let's talk a little bit about small US crude oil here. And actually, Jermal, run us through this in terms of what we're getting here, because what we have is the same 100 times multiplier, same expiration as you mentioned, cash settlement, same dollar tick.
Yeah, so this small U.S. crude oil future offers as a commodity to everyday traders. I find it interesting that the correlation is really pretty much close to 1, so that's good to know. I always wonder, as I've just learned about the initial margin, we'll talk about that calculation probably in a second. But I think the biggest thing you said is the exposure. Like it's 100 times whatever the contract is trading. So in this case, probably from yesterday closed at 66. So that's why we have the exposure of 6,600. I'm guessing our correlation here, to go before we finish off the margin, the correlation here with stocks is 50% over this past year period. I would venture to say it's probably even higher over the last probably 3 months, because as people have started to venture back out, as stocks have still been rising, that crude oil has started to rise again because we know there's going to be higher consumption. So I think that's an interesting thing. Like over the last year, it's probably 50%, but I bet it's closer to 70 to 80% over the last 3 months, or where I was since January probably. I bet you could line that up with stock chart, and it's probably very similar. So, but initial margin, like where did we get? How does that calculation come about? Is that span margin once again, and then also with this expiration, it's different, right? Like it's not. This is the one that's very different.
It is. So, right. Span margin is across the world of futures. Whatever futures your product you trade, span margin is there. So it's the same margin model as every other product we've looked at and traded. So, our equity indexes are about $500 in the smalls. Yeah, Treasury's about $180. So why the difference? Why is this one more? You hit on it perfectly. It's because it's a more volatile product. Span has two real variables. There's a whole series of formulas, but really what drives it is daily movement and volatility. Daily movement and volatility expand, your initial margin will expand. If it contracts, it will contract. Pre-pandemic last year, before we traded below 41, margin in crude when it was relatively quiet was around $3,800 a contract. In the big contract, I told you today it's around 8,000. Now, does that tell me it's riskier or not? No, it just tells me that there's more volatility in there and there's a larger daily average move. That's all it's doing. It's not telling you anything. There's no tell to it. It's just math. And the margin is calculated just to ensure the integrity of the marketplace, that everyone can honor their trades. And that's what margin is used for. It's not used as a tool by exchanges to slow down activity or slow down the pace of a market's movement. It's just reflective of what it takes to ensure integrity in the marketplace. So same basic idea with this margin across everything else there.